Retail investors can have their voices heard now more than ever. And our next guest has helped facilitate the votes for 365 million shares on its platform just so far this season. Let's now bring in Tim Gokey, the CEO of Broadridge, a very big fintech company. They do a lot of the things that you don't see that makes the financial markets worth. Tim, thank you very much for joining us here on this special. I wonder whether or not you can give us your take on just what it means to see the kinds of activity that we've seen in retail markets with these so-called meme stocks and beyond, and what it means for financial markets overall.
Absolutely. Thank you very much for having me tonight. And yes, Broadridge is a 20 billion market cap global fintech. We power the critical infrastructure behind governance, investing, and communications. We connect every broker-dealer, asset manager, investor, and public company, and we clear and settle $9 trillion of trades every day. So it does give us a unique vantage point. And one of the things that I think would be interesting to your viewers is there's this sort of activity on the top of the market that we've been talking about, we've been hearing about in the first segment of the show, but that is built on a much broader underlying megatrend around the democratization of investing. And one of the things that we see, one of the ways we actually get paid is by the number of individual positions. If you own one share of IBM or 100 shares, it's one position. And that continues to grow. Over a decade has grown high single digits, but last year it grew 26%. And the year that ended in June, the 12 months ended June, it grew 18%. And when you look into which positions grew, there are some of those so-called meme stocks, but it's all the positions. And of that 18, the meme stocks only accounted for something like 1%. So there's this very broad-based growth in retail investing, and that is it's a long-term trend. So it's not just what's happening right now; it's really what's been happening over quite a while.
So Tim, I mean, I'm not that old, right? But I'm a middle-aged man. I remember early on in my investing career having all of those mailings, right? The proxy voting procedures, I have to send these things back again. There was a prepaid stamped envelope on there for you to send things back. There was not a lot of retail participation at all at that level. We relied on the mutual fund managers that managed our money to kind of make those votes and everything else. Do you feel as though the times have shifted a bit? Do you think that folks like you, others have their individual voices heard more as shareholders than we have in the decades past?
Yeah, I think that is a real opportunity, and for your listeners to think like owners versus, be a trader, but be an owner too. And it's interesting when you mentioned the paper side of that, because, one of the things we worked with our clients to is really increase the digital aspect of it. This past year, 86% of all the activity was digital, 97% of the votes were returned electronically. And one of the things we did for investors was upgrade our proxy vote app right on the phone. You can vote with one click. You can set preferences to be alerted for topics that you might be interested in terms if there's a proposal related to one of the companies you own. So it really is making it easier for retail investors to get engaged.
And Tim, before we let you go, one of the things you mentioned, the app and technology being a big driver of having shareholder voices heard. What do you envision that shareholder voice looking like in the next 5 or 10 years? Is it more active, or does it kind of get drowned out by the fact that people use ETFs more than they ever have in the past?
I think, the mix between funds and individual stock picking, I think it's going to be tension back and forth. And what you see is when everything goes to passive, then that creates more ability to have alpha through active management. But if we take a sort of a 5-year view, I think what we really are saying we do, because we get all these positions and we really have great insight into who the investors are, we're really beginning to see that shift of the assets from the so-called silent generation to younger investors, smaller accounts. And you can really see that and that sort of $30 trillion that we've been talking about probably for 10 years, you're really beginning to see it move, which I think is empowering new investors in the market.
All right. Tim Goecke, CEO of Broadridge Financial. Thank you very much, sir. Have a nice weekend.